Good morning. Welcome. What a beautiful morning it is in Dublin as well. I'd like to start with thanks to Kimberly Lewis for inviting me here, and thanks for putting on a great conference. There's a huge amount of work that goes into it. It's really wonderful. Also, I'd like to say that it's great to come back here because there's a lot of familiar faces, and it's great to catch up with people. And that one of the benefits of aging is you do get to see things. You get to see familiar faces. And somebody wise says that wisdom comes with age, but sometimes age comes alone. I'm not going to promise you wisdom here, but what I can promise is some observations of having got old and been to a lot of these conferences over the years. And Ned made the point that the industry's really been transforming at rapid pace. So Google's come along, the yellow pages are dying, or maybe they're not dying. Facebook's come along, we've seen Groupon, we've seen Yext, we've seen Matchcraft, we've seen lots of companies. And the question when I always go to these conferences is lots of companies, but who's actually making the money? And the second question I have is an investor question, which is, where's the investment dollar or euro going? Because if you follow where that money's going, then perhaps you can predict what's going to be happening in the future. And I think one of the observations I'll make here, and you can agree and disagree, is there is something of a tectonic shift about to happen again in our industry. We had Yellow Pages to Google, but now something big is happening, and it's really the Uberification of the world. So jumping in.
No, big green button, big middle green button.
Yeah, okay.
Big one.
Yeah, I don't know how to use technology. So just a bit of background on me, 20 years in international local digital. I'm currently CEO of Service Magic Europe, which is marketplaces for tradesmen if you want painters, plumbers in your local market. And it's a juxtaposition to the earlier discussion, which was all about marketing. And there is a shift to new business models, which is maybe it's not about marketing, maybe it's about lead generation. And my colleague Ronald Egers, who is CEO of WorkSpot, will take a deep dive into his Dutch business later. And I think it raises a lot of questions relevant to the panel discussion earlier, is what is it that the small business wants and what will they pay for? Then I spent about 10 years in the US and in Europe heading up digital transformations in the Yellow Pages business at Dex Media in the US and European directories here. But I also wear another hat, which is on investing. So I'm an advisor to DN Capital, which is best known for its Shazam investment. But the reason this is relevant is when you're on the investing side, you see where the money's going and you see the young startups, one or two person companies, and they all have the potential to really disrupt our industry. So I come to these conferences, and there are many new companies. I actually asked Neil, I said, Neil, have you got a landscape map of who all of these new companies are in local? And as you can see here, Neil shared this with me, it's an absolute blur of new companies in our local space. You have payments, referral management, website companies, social media companies, local business leaders, things. These companies here are all probably less than 10 years old. So who's making the money? Well, it used to be easy to answer this question because it was the Yellow Pages and newspapers made money, and they made a hell of a lot of money. You know, if I go back to 2006, and this is US figures, Yellow Pages were making 12 billion. This is according to Kelsey. Next figures from LSA are probably a bit more than that. And it was amazing. The EBITDA margins were 50%. These things were absolutely printing cash. And in 2006, the companies, Yellow Pages companies, were selling at 10 times EBITDA multiples. Phenomenal. Cash cows. Then we go to 2012, which in some ways was a nadir. But the revenues pretty much halved in the industry. The profits were a third of what they were before. And companies sold for a whopping 1.75 times EBITDA. And this is in the space of 6 years. So there's a massive sucking sound sort of come out of Yellow Pages in terms of cash coming out of it. And really the question is why? Well, it's very simply from a consumer perspective. Consumers used to go to the Yellow Pages to find businesses. Very simple, basically a monopoly business. But over the past 10 years, they've had a plethora of choices. They can go to Google to find your local business. They're going to interactive Yellow Pages. They're going to verticals like Yelp, going to companies like OpenTable. They're going to Just Eat in the UK for delivery of food. In the US, in the vertical segment of home services, they're going to HomeAdvisor, they're going to Angie's List. So consumers suddenly went from having one choice to find local businesses to lots of choices. And hence the money follows the eyeballs, and hence we saw a lot of the money coming out of the Yellow Pages. But it's a two-sided marketplace, consumers and the small SMEs. And what we saw with SMEs is they would basically buy an ad in the book, pay for a year's subscription, the telephone would ring, they were happy. But now they have a lot more choice. They can go to Google for AdWords, they can go to IYP for advertising, and they have a whole series of different new integrated marketing agencies. So you had Reach Local, GoDaddy, Web.com, and Yodel. Lots of different places where the small business can advertise. And it goes back to the earlier conversation of where should the SME advertise and in which products and how many products should they actually have. But the point is they have choice. So all these new companies have started. And the question for me, and I won't try and do a Tom Cruise impression, is very much show me the money. Where has the money gone? So I did a bit of a research on public companies to see their filings. And it's not comprehensive, but I think it's illustrative. So Reach Local, Web.com, marketing services agencies. And who's from Web.com, by the way? Do we have our Web.com friends? Okay, thank you. Anyone from Reach Local? No. Okay, so Reach Local, and you can see the blue graph showing revenue's done fantastically. It's now at about $500 million. But unfortunately, the red line at the bottom there is actually showing the operating profit. Haven't made any money historically, and actually last year they started losing more money, okay? That's okay, maybe they're investing for the future, and when they're $1 billion company, they'll start making lots of money. And you go on from there, Web.com is 544 million, and actually been growing quite nicely on the revenue line. Did a lot of investment a few years ago, and actually just about starting to make money now, $9 million. But there's not a lot of money being made here. And then GoDaddy, which has just announced it's doing another public filing, $1 billion company. If you've been in the States, they do wonderful advertising. In the Super Bowl, I think the Super Bowl ads go for, I don't know, 5, 10 million, Neil, a piece?
Yeah.
Not cheap. So when I looked at their filings for their previous attempt at an IPO, 1.1 billion in revenue, growing 15% a year, that's big. And they're making a whopping minus $200 million of profit at this point. Keep going, Yodel, which is another integrated agency, has been around for about 7, 8 years at this point. They're filing for an IPO. And their revenues, I think, this year will be about 200 million. And last year, they made a whopping minus 13 million. So there's been a lot of new companies, great revenues, but where's the profit at this point? Well, we can look at the consumer directories. Small businesses are going to these agencies, getting their SEM, getting their SEO. Now, what about the consumer directories that are pulling us in as consumers? Well, Yelp, which we know is the ratings and review services for restaurants, spas, and the like. Again, the blue line shows that revenue is doing really well, and actually they're just about, for the first time, making a profit. Then we go on from there, Angie's List, which is a model that we know at HomeAdvisor very well. It's a consumer subscription where you pay to actually get ratings and reviews. Who would pay for ratings and reviews in this era? Not many of us. But anyway, they have had a strong growth in revenue, but have never made a profit at this point, and their stock is in the toilet. So somebody must be making lots of money because there's been a lot of money flowing around here. And it starts to be a bit of a pattern that's occurring here. And it's really where I started to see companies made money is in the verticals. Is the more specialist you seem to get, the more money you start to make. So OpenTable, which is restaurant booking, ratings and reviews, part of the transaction, was sold to Priceline last year for about $2 billion. Now, revenues might not be massive, about 190 million. It's growing nicely, about 20% year over year. But they actually have a very good operating income here. They made 46 million before they were bought, so a 25% margin. And then you go on. HomeAdvisor, our parent company that's owned by IAC, again, vertical specializing in the home services space. They're about a $200 million business, and they are profitable. Can't say at what level, but they're profitable and growing.
Oh, come on.
I'll let Ronald answer the question later. Just Eat, which is restaurant ordering and delivery in the UK, just had a big IPO. Again, a very verticalized business. First half of 2014, they had $70 million in revenue, which on the current exchange rate is about $105 million. Operating income of 16 million and a margin of 22%. So these verticals seem to be doing something that's allowing them to get actual profitability. And then Auto Trader, which is classified in the UK, very, very profitable business. 2014 revenue of 238 million and operating income of 100 million. It's probably the best that I could find out there. So a lot of companies, some of them started to make money, but my best bet, though I think Paul will probably challenge this a little bit, is so who's really making the money in local, and if we follow the trail. Google. And I think we have to go back to Google here. And if we look at Google overall business, it's just phenomenal. The scale and the size. As an overall business, 62 billion in revenue, and it's harder to grow the bigger you get, and they're still growing. Now, their margins are coming down, gross margins to 62%, but that's because I think they're diversifying into many areas. I think in many cases, if you look at AdWords and where they sell AdWords, their margins are probably 90%, if not more. So how much money is Google making local? And I'd love to get your thoughts because I've asked around on this question, but the simplest approximation I can come up with is Todd Rowe, who's based in Palo Alto and heads their reseller channel to the small SME businesses. He says on his LinkedIn profile that his revenue stream and channels is worth $5 billion. And he works across multiple countries. And if you assume the margin's about 60% on 5 billion, then it's probably pretty easy to say that Google is making a huge amount, billions, in the local space. And what the brilliance of Google is they don't have what a lot of yours and my businesses have, which is they don't have the cost of sales, the cost of a sales force, the cost of supporting those customers. Basically, what Google does is takes pure margin on the AdWords and gets the rest of us to have the expense of sales. It's absolutely brilliant. It's also, I don't think we should forget the Yellow Pages. I mean, I had the graphic of the Yellow Pages sort of being split down the middle, but they're still making a lot of money at this point. It's just not those historic monopoly margins. I haven't been able to figure out Facebook, but you've got to figure that they're going to be starting to make a lot of money in local. And I think Paul's point earlier, though I couldn't quantify it, is a lot of the money is going into the small local agency, the friend down the road, the two-person web shop as well. So how do you make money in local? And I throw this out as more of a conversation starter as opposed to definitive, but really two axes. And it goes to Ronald's question earlier, which is, do you own the consumer? Do you own the media? Because if you have the media, then you have a lot more of the margin there. And secondly, are you a broad horizontal service covering lots of categories, or are you a verticalized service? So if we look down here on the left, the marketing agencies, the GoDaddys, the Yodels, the Reach Locals, they don't own the media. So they're having to buy the media, they've got the sales force, they've got the customer support. The margins are low. Now, you can make a lot of money if you get scale, but the margins are low there. Then you start to look at the picks and shovels companies. There's a lot of companies providing technologies, payments, website technologies, and alike, SEM technologies such as Matchcraft. And you can get good margin there, but again, it has to be at scale because you're not fundamentally owning the media. So the gameplay is get hundreds of thousands, if not millions, of small customers through the reseller channels. Now, if we start going to the right and you actually own the consumer brand, then you can actually see some massive scale for horizontal players. So Google's making a lot of money. YP.com in the States, that's owned by Cerberus, is the #2 mobile marketing network. They've got massive scale, they own the eyeball, and they're making money. But then I think you start getting into the top right, and you get into the lead generation businesses, the home advisors, the auto traders. They're verticalized, they've got the consumer, they're getting scale, and they're making money. And then you get into what I would call the businesses that have really got into the transaction, the Just Eats of the world, the Open Tables. And those companies move from being a marketing service for you to actually being part of your business. They're critical to your booking, they're critical to your transaction. And once you're critical to the business, it's really, really hard to get you out. So your churn rates go from, I don't know what the Yellow Pages churn rates are today, but
They're probably pushing down, well, the retention rate's probably in the 75% now.
yeah.
It depends on the product, too. SEM continues to have high churn.
Yeah. I mean, historically, the Yellow Pages print retention rates were up at 80%, but that was 15 years ago. But I think the key point is as you start to get more vertical and specialize, then you can really start to offer the critical transactional services into the business. And once you're there, it's very hard to remove you, and hence you get your margins higher. So I think OpenTable and Just Eat points to the future of where our industry is going. And the industry is going very much in the vein of Uber. And it's fascinating being out in California with many of you before Christmas, and it just hit me how much the Uber model is going to impact our local industry. So the old world was, as a consumer, if you wanted to interact with a business, you go to the Yellow Pages, do a search, you would call that business, you would book over the phone with that business, schedule something, then at a certain time, you'll go into the business, you'll consume the product, you'll pay for the product, then maybe you'll go to ratings and reviews. And you'll go to lots of different places to do this and use lots of different media and channels, be it phone, online, and the like. But I think what we're seeing with Uber and for local is the value chain is being disintermediated. We're not going to do these steps anymore separately. We're going to do these steps in one place with a mobile-first phone. And Uber has clearly defined, and how many Uber users are here? Okay, a handful. I started using it about a month and a half ago, just amazing. And my repeat usage is absolutely phenomenal at this point. And I'm probably, as soon as you try it, I couldn't believe how much I was sucked in because it's so convenient and the pricing is so good behind it. So I think Uber sort of points to where's local going next. And so I'll give you a few facts on how much money is going into this Uberification of the world and the local Uberification. These are just a snippet of companies from 2 years ago across different local verticals. Transportation is being Uberified, dining and drinks are being Uberified, delivery and logistics, events, home services. There's a massive Uberification of that going on. Health and beauty, book your salon online or have a massage come to your home tomorrow, all booked from your phone and paid for. Food and beverage, delivery, travel, hospitality, Airbnb. So it's a massive shift, and the money that's going into it, and this is where it starts getting interesting, I believe, is in 2013 in the US, there was 1.3 billion of VC money put into Uberification of companies, and 0.3 billion outside. Now, I couldn't get the 2014 figures, but I bet you it was double, triple, quadruple that of VC money going into these new local companies. And you look at Uber, Uber's raised $5.9 billion, which is just staggering sums of money. It has a valuation of $40 billion, which is bigger than pretty much any travel logistics company out there at the moment. And then Airbnb has raised $0.8 billion at $13 billion valuation. Massive, massive amounts of money. And these companies are only 5 years old. Absolutely amazing that a company can get that much money in valuation in such a short time. So in 2013, cars were hot. $1 billion went into the car services, both in the US and abroad. But now there's another shift going on, and this is where it starts getting relevant to our industry, is VCs are looking at where the money is in local and where the categories are in local. So home services, finding your plumber, finding your painter, getting your roofer, is really, really hot at the moment. There's been $150 million gone into Thumbtack, and it's only a few years old. Porch, which is in Seattle, has raised $100 million, and then Pro has raised $17.5 million. But what was really interesting, it caught my attention in California, is Thumbtack has just raised another round of $100 million. And one of the investors was Google. And it was kind of like, why is Google investing in home services? And just chatting around with a lot of my colleagues, it's interesting because Google, for the first time, is worried about this shift to the on-demand app. They have historically sort of killed the yellow pages because all consumers go to Google to find their local businesses. But now they're worried because the next shift is going to be to the app and branded apps. So consumers will go to Google less to find the plumber, and they'll start going to all these branded apps. And if consumers go to the branded apps, then Google is not getting its advertising revenues from search. So I think that was interesting to see Google take an investment there because they can see the shift that's going on and are concerned about the shift going on and frankly want to be involved in the companies that are going to cause the shift. This is an interesting one. The Reach Local founders have just started a company called Service. And this is subtle what they've done here. It took me a while to work this out, and Neil was telling me lots about it. The Service has raised $20 million. And what's different about it is it's not a marketplace of bringing consumers together with tradesmen. It's their own marketplace and their own tradesmen. So what they're looking to do is build their own network of tradesmen, brand them, put a uniform on there, and have quality control over it. And I think this is subtle, but it's an important shift that it's going to see a lot of companies that basically become the brand owner for the future local marketplaces. The other thing that's going on is Yellow Pages have always been very broadly horizontal, hundreds of categories, thousands of categories. But the venture capital money is starting to slice and dice this into finer categories here. So you've got home services that are broad like HomeAdvisor and Porch and Thumbtack, but then there are VC money going into even slicing up home services, which again has sliced up the broad Yellow Pages. So the cleaning vertical, where on your phone you can book a cleaner to come to your house tomorrow for 3 hours, pay them, rate them, all that sort of thing, has raised over $100 million. A lot of money. So Handy's raised $45 million. You have HomeJoy, and over in Europe, we're seeing cleaners. In Germany, it's, what's the German one, Michael? Okay.
Is professional cleaners an oxymoron?
Is professional cleaners an oxymoron? Yes, in some ways.
Keep going, sorry.
Yeah, no, I know where you're going with that. And the Uberification goes on. If you've got a dog, who are dog owners here? Okay, dog owners. As you know, as a dog owner, you hate putting your dog in the kennel. The dog's unhappy, it's in a little barred kennel, it looks at you. So wouldn't it be great to have your dog boarded with like-minded dog owners in their own homes? So this company, Dog Vacay in the US, is a sort of Airbnb for dog kennels, rated, that sort of thing. And you can laugh. But it's raised $67 million.
So what do they value that business at?
Oh, you've got to figure it's 5, 10 times that sort of number.
So it's a $500 million business.
Yeah.
Is the whole kenneling business that big?
The
You
which
know,
business?
The kenneling business.
Yeah, yeah.
I mean, you know, you sort of look at this stuff and wonder if it's just stupid money chasing interesting ideas.
Is it a bubble?
Yeah.
Debate. But this business is doing well. I don't have its revenue numbers. You keep going. So you get somebody to look after your dog. You're at home. You can't be bothered to wash your laundry. So why don't you get Wash.io? To book Wash.io, they will come to your house at 9 o'clock this evening. They'll pick up your bag of laundry. They take it off. They wash and fold it. They bring it back at scheduled time. You will never, ever have to leave your home again, is the way it goes. 16.8 million. And starting in the US in terms of the large sums of money, but it's happening around the world and it's happening very quickly. I was at a pitch event on Tuesday night, and this 23-year-old kid who's on his second startup, having sold the first one for $1 million by the age of 23, starting a company called Urban Massage. And he just got a valuation of $7.5 million on that company at 23 years old in London. But Urban Massage, feeling stressed out, get your phone out, look at the availability of masseuses. Masseuses will come to your home at the allotted time. You rate them. Life's good. Germany, there was a really interesting transaction last week. Quandu, which is a sort of competitor to OpenTable, Top Table, got bought by a Japanese company and sold for $219 million. Booker Tiger is in the cleaning services as well. So it's happening around the world, and it's happening very, very quickly. And there's an advantage to speed here. When you're building a marketplace of network of buyers and sellers, just like an eBay network or other networks, if you get there first and you build the biggest network, then your network will continue to get bigger and bigger and be number one in market. So to Neil's question, is this a bubble, or is this a valid business strategy to make sure you're first and get big first? You could probably tell me about this one, Neil. I mean, I have never heard of this one. Neil sent me an email saying, oh, there's this company, Bookable, called that's just raised $77 million. I'm assuming it's your scheduling.
It's a scheduling platform.
Scheduling platform. What's amazing about this as well is they've only had one round of financing. Normally, when you're a startup company, you raise a bit of seed capital, a bit of angel capital, you go to Series A, Series B, Series. These guys just raised one round of $77 million. Astounding. So you'll never have to leave home again. You can sit there, order your food, order your masseuse, get somebody to walk your dog. If you do need to leave the home, you can get Uber to come to your front door. Life's good.
Life's good for the 2% of the world that can actually afford and use these services.
So the question is where's the money? Where's the money going? And it's clear that the race is on for the on-demand economy, and the first mover advantage exists here. And it's interesting, as I said, that Google is concerned for the sort of the first time that perhaps it no longer becomes the front door for all of our local search activity. And I frankly think it's good. I mean, Google in Europe has a 90% plus market share for search, and it's good that they have competition. But if you look to the future, you know, it's a question of whether or not it's a bubble. I think there is always a bubble element when there's a massive shift in technologies, there's this massive shift in paradigms. You do get a gold rush mentality with VCs running in, people running in. A lot of people will lose a lot of money, but likely coming out of this, there's going to be one or two big winners in each category. And for those who own those companies, they will make a lot of money.
I think the dog vacancy thing that's going to be the big winner.
You think so?
Yeah, I do. Because people cherish their dogs and their pets more than anything.
Yeah, okay. There's the next one, no one's quite figured this one out, is babysitting.
Babysitting?
Babysitting marketplace, because there's such trust issues. You know, you're a parent.
Yeah.
Anyone who's a parent here, are you really just going to book a babysitter through a mobile phone because they've got a 4.5 star rating? Probably not. But that's another one. So if you want to start a business, if you can figure out the trust dimension, you can make a lot of money there. So making money in local, at the end of the day, as we know, because we've been in this industry for a long time, it's hard. And the reason it's hard is selling to small businesses, the acquisition costs are high, the churn rates are awful, the customer support costs are getting higher and higher, and as you start to see the Yellow Pages margins come down. It's hard. It's a messy business serving hundreds of thousands of SMEs. But it is possible to make money. But money comes with scale, comes with brand when you own the media. And I think the next shift for us, if we really want to solve the churn and transaction issues, is we get into the transaction. Because once you get into the transaction, it's hard to get out of the transaction. So those are thoughts. I don't claim that this is definitive. I very much like conversation throughout the conferences to your thoughts on who's making money and who's going to be making money in local. So, thank you.
Well done, Simon. Good job. Are we going to do Q&A, or are we going to go right to you, Kimberly?
We can take a couple questions.
Let's take a couple questions.
Oh, here.
First question is, why did you leave Booking.com out of it? Because it's probably the best example of a transaction business.
The travel.
Yeah,
Yeah.
Booking.com. It's worth $60 billion, makes $8 billion a year with a EBITDA of $3.5 billion a year.
Yeah.
Okay? And it's valuated at $60 billion. So all the transaction,
Yeah.
the point we're getting is that everything that has to do with advertising went to Google, including TV, newspapers. And so we are not the only ones who gave money to Google,
Yeah.
okay? Lots of people gave, and then that's the advertising business.
Yeah.
The transaction business, all the valuations are made based on past results. There's no bubble there. The only bubble, the only risk is disruption. Booking.com may be disrupted by Airbnb, right?
Fantastic point. Booking.com is a Dutch company, isn't it? Dutch. Is Booking.com Dutch? Okay.
Yeah, but it sells on the US. Okay?
Yeah, I think it's a
so
great
I would like the comments is first,
Yeah.
forget the proposition, forget publishing, advertising. Transaction, you have to deliver. Valuation is based on the past. The point of on-demand,
Yeah.
is it a bubble? News question, right?
Well, you know,
They're evaluating it on the future. So it might be a
it
bubble.
might be, some of them might be a bubble.
Yeah, Airbnb might be a good point to invest so that you don't have to complain that you didn't invest, buy Apple shares.
Right. You missed yesterday. I talked a lot about this yesterday.
Yeah.
And I said that the marrying of big data out of the Internet of Things, all our devices,
Yeah.
are sending all these signals so that we won't even have to get advertising anymore, because we'll get trigger alerts that says it's time to buy this. You've run out of this.
Yeah.
You need to do this. This is your behavior. We know what's next for you.
So your Fitbit will tell you that you're hungry.
That's right, and that will tie in with, you know, OpenTable.
Yeah.
And so all so the Internet of Things tied with the on-demand economy is really going to change the advertising world and in a very profound way.
Yeah.
That's kind of the argument I made yesterday.
Yeah. Who believes that? Hands up. You've got some skepticism here.
Yeah, on the transaction, okay, that's speculation in the future. The transaction is present.
Right.
Yeah.
Right? Transaction is present. All valuations are made on past performance.
So Simon.
Booking.
Yeah. Yeah, I think your point is right. And Booking.com, I think it's a great example. I could argue that it's not a local company per se, more of a travel, but
It's a worldwide company.
yeah, but yeah, the point that they're branded, they have transactions, they have scale, they're doing fantastically.
And lots of competitors.
Yeah.
See, I would argue that Google's investment in that, what was it? It was in, not Porch. but
Thumbtack.
Thumbtack. It's really so that they can learn, after they've acquired all these massive number of SMBs,
Yeah.
how to shift from an ad model to a performance transaction model.
Yep.
And so they're going to learn through that, and they're going to, and you all are helping them acquire all those customers.
Yep,
I forgot to advertise. Also transaction-based.
yep.
Yeah.
Okay.
Okay, we're done. Kim is going to send us off to the break, and Simon will be back evaluating some of
Thanks,
these.
Simon. And just a couple things before
Well
the
done,
break.
Simon.
Thank you.